Closing bell 9 minutes away. Well, look at this. The Nasdaq just punched into positive territory, up 9 points, joining the S&P, which is up 10. And then the Dow Jones Industrial is up 168. Flip it over to crude oil. We do have it below 60, well, just at $62 a barrel. Lots of concerns about demand or lack thereof if we do see an economic slowdown. Not sure if we're going to, but a lot of people are anticipating that. And part of that has to do with all of the market volatility that we saw this month alone. I mean, if you look at the S&P 500, it had gone into correction on April 8th. And on April 24th, which was very quick, it actually exited. It exited the correction. This was after it hit an all-time high on February 19th. So you got a lot of volatility here and turbulence. It may be the reason our countdown closer says sporadic upticks do not a trend make. Leon Cooperman, billionaire investor, chairman and CEO of the Omega Family Office, is joining me in a Fox Business exclusive. Hey, Leon, nice jacket there. Where'd you get that? United States.
Costco, and it was on sale about 5 years ago. And it still fits, and I wear it. That's wear it.
Well, we'll take it. Let's talk about just markets from the bigger picture. The S&P has exited correction territory. Something tells me you'd say we're not in the clear just yet. Why not?
Well, let me just say this. Warren Buffett has been quoted as saying that forecasts of the future tell you more about the forecast than they tell you about the future. So let me tell you about myself. I'm 82 years of age. I like making money for two reasons. One, if I'm making money, it means I'm right and I have an ego like everybody else. And number two, all my funds are committed to charity. I like to give away more money. If I'm right in the market, I'm making money, I'm able to give away more money. I'm a centrist by nature and I think the radicals on the left and the right are ruining the country. I believe in legal immigration. I'm giving you my manifesto. My father came to America from Warsaw, Poland in 1920 at the age of 12 as a plumber's apprentice. He had no formal education, but understood the importance of education. I am the first generation in my family to go to college. Okay, all my education was public school based in the Bronx. Public school, PS 75 in the Bronx, Morris High School in the Bronx, and Hunter College in the Bronx. I had a short stint at Columbia Business School, which opened the door to Wall Street to me through Goldman Sachs, where I joined in 1967. I refer to myself as a capitalist with a heart, okay? And basically, I am of the view that, as I said, the radicals on the left and the right are ruining the country. And I support an organization charitably that's called,
well, let me just jump in here.
It's called Kindness Matters 365. And the importance of that organization is they teach children 3 and 4 years of age the importance of kindness. And I think that the politicians today ought to take that lesson from these 3 and 4 year olds, because I think the way they talk to each other is very discouraging. And I think that the public is very fed up with the absence of leadership in the country, which is one of the reasons that I have a conservative view of the market. I think the president is on the right track in terms of responding to our growth in debt, but I don't think he's doing it the right way. The truth is that he's too radical in his views, that he's moving too quickly. I marvel at his stamina. I'm the same age as the president, and I don't have his energy. But I think he's doing too much too soon.
Well, when you talk about too much too soon, what he has done has upended the markets in many cases, although the markets are coming back. That said, while you may be a little bearish about where the markets are going, you aren't bearish about picking individual stocks. And I want to get to a new position.
It's very similar. I made a comment about a year ago, turned out to be too conservative because the market did better than I thought it would do. But I talked about the Pharaoh. The Pharaoh had a dream. The dream was interpreted by Joseph in the Bible. The dream was we were going to have 7 lean years following the 7 fat years. And I'm of the view that when you look at the world situation, that the market doesn't deserve to be at 22 times earnings. I think the multiple is too high and it's going to come down. And I think the more realistic multiple for the market is like 17, and 17 times 250 in earnings, which are recession earnings, or 275, which are non-recession earnings, has a market that's well below where it is currently. So I don't think the market is at its final bottom, though I don't expect it to go up very much. I joined Goldman Sachs on February 1st of 1967. The Dow was 1,000, and 1982 was 1,000. I wouldn't be surprised if the major averages are in that mode for a while. They're going nowhere, and that PE ratios come down, and I have to make my money by picking individual stocks, which
Well,
has been
let
my
me get
long.
to some of those because you have a new position in a stock that's been around. It's GE Healthcare. Why this one? This is an interesting pick. It is off, it's well off its 52-week high, but that means you're just not buying it at a high price, which is nice. But tell me about GE Healthcare.
Well, if I get my colleague on the phone, he can give you more detail than I can. But essentially, this is a reasonable multiple, well-managed company, and we think the news in China is going to be better as it regards healthcare technology. So we think that the sell-off has been excessive, but we don't have a big price objective, mid-70s, but we have comfort in the management, and we're very diversified in our portfolio. I'd say that our biggest position has been a big winner this year, and we continue to like it, and that's Mr. Cooper. We bought it as low as 2. It's currently about 130, and we think it could be worth 200. We have big energy exposure because we think the cost of finding energy is becoming very high, and we don't look for a big decline in energy prices. So we like energy transfer. We like energy products, EPD.
Yeah.
We're very diversified. Our favorite finance company is Fidelis, in the insurance space. I think in a tight market, which we have now for insurance, you ought to be able to earn 20% on equity, and the book value is about 20. So it'll be $4 in earnings. The stock I see on your screen is 16.22, 16.19. So it's about 4 times earnings buying back stock, and a decent balance sheet with very high return on equity. We have a lot of free cash flow, which they're channeling into buying back their stock. So we like something like that. We like Tourmaline in the energy group, which is extremely well managed. We like the brother-in-law of the guy who runs Tourmaline, Paramount Resources, POU up in Canada. We have a diversified list of holdings, but they're generally value-oriented, well below market multiples, generate free cash flow. We don't expect much from the averages. And
Leon,
for the reason I'm sorry.
It's okay. We've got about 45 seconds left. I just want to know if, and again, this is forecasting, but do you see a recession? Does that change anything you do when you're investing?
No, recessions are recurring. Every 4 years, we used to have a recession. Now we have them later on. I think our principal concern is the fiscal condition of the country. I think we're building a house on a very weak foundation. And I give President Trump the credit for seeing that. We are very late in dealing with our debt. And this was debt run up by both Republicans and Democrats.
Yeah.
We can't blame anybody. But, 9 years ago, the Simpson-Bowles Commission came out with a recommendation about doing something on Social Security. Everybody agreed it made sense, but nobody.
Yeah.
And today is 3 times greater than it was then.
Yeah.
So
Leon, there's the bell. I know you recognize it after being in the industry so many decades. We thank you.